Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Market 5. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Tommy Lackey Jr. on the line. He's founding partner and CIO of the Barber Lackey Financial Group. Tommy, how you doing on this Thursday morning as we get kicking into earnings season?
Doing great. Doing great. How are you guys doing today?
Doing good. Got a nice, crisp connection here. Before we roll into individual issues and the market here, you've developed and utilized various proprietary technical market tools to identify opportunities for portfolios that you manage. Now, without giving away your secret sauce here, could you tell us a little bit about those proprietary technical market tools?
Sure. And in most cases, I don't really mind giving away because I don't really think there is that much of a secret sauce. I'm a big Gerald Appel fan, the MACD founder, and he once said in one of his books that he's never lost money by giving away an idea. And I
Okay.
think there's a lot to be said about that because it has to do with how the person uses it from there. So I'm a big relative strength person, and I believe you can measure relative strength in many different ways on different levels. And so what I've done is over the last decade or so put together a combination of a proprietary relative strength indicator, and that's the one formula I don't give, but it is a 3-month based indicator that has some weightings in it to allow me to identify turns in market sectors, things like that, quicker in a lot of cases. And so that allows me to get on earlier trends. Of course, when you get on a trend earlier, the chance of failure is higher, but you're also closer to your stop. So there's a trade-off there. And so basically with that, I put those together with a very broad-based breadth set of indicators that I use, that I don't just do breadth on the major markets like the New York Stock Exchange. I break it all the way down into the sectors and the industries so I can really kind of see from that type of relative strength where the money is flowing into and out of the markets, where the participation really is.
Okay. Good.
And so
Great.
combining those two gives me a both overview, which is the relative strength of what's happening in price in there versus its universe, and then also kind of an under the hood view of what's happening inside each of these areas.
Yeah, it's always not. I mean, you made a great point there about buying stocks, on a breakout. Well, yeah, you don't have as much confirmation, but it's always nice to, be in something and then you have the breakout for confirmation, maybe to add to the position or, something along those lines. So,
Absolutely.
great points here. So, we got to get your opinion on Netflix here, trading up nearly $56 here at 551.39. Credit the Wall Street analysts; they were all over this thing late last week and early this week, bumping up price targets. Call it what you will. Stocks trading up over $50 here. Buy, sell, or hold at the 531 level in Netflix.
You, I think it's one of those scenarios, like I told you last time, it kind of depends on where you want to go with it. I believe long term, this is a big breakout. I really don't care whether the earnings were really all that good or not. People like them. And as long as people like them or like what they heard, for the most part, it's going to continue to go up now that it's broke this long consolidation. Because that consolidation was 7 months and 100 and I believe, let's see, we go from 320 to 480. So 160 points, that's a large, I mean, even though it's a high price stock, that's a large range that we're moving out of pretty handily with a breakaway gap of all things. So, it could come in and it could try to fill some of that gap, but as long as it doesn't fill that whole gap, then you're running into a scenario to where you start looking at levels to where the longer term you are, the closer you can go to that gap. The shorter term you are, obviously, you have to play it differently. But I think higher is where this ends up.
If you were wait, I mean,
Past.
if you were waiting for that last gap to be filled from the last earnings, you were shut out because
Well, that's my point.
yeah, it had the gap and go, and then it came back, and then just had like 3 or 4 days of tight ranges, kind of looking into the abyss kind of chart, and then just turned around here. So okay, that's your take on Netflix. Crude in the energy sector perking up as lately. Everyone think crude or lot of talk of crude going to $20 because of oversupply. We've had a nice rally here. It's still just a rebound in a bear market, or looking for crude to maybe take back some more of these losses from falling from $100 to 40.
Could be both. And I think that's the point here is that a lot of people don't realize the drop we had in crudes only happened 6 times before. And all 6 times we had a drop of that magnitude, typically we rebound roughly 50% of it within 6 to 9 months. That doesn't necessarily have to happen again, but the chances of us only rebounding 5 to 10% of it probably going to get more than that. And so when we talked last time, we were talking and crude had run up and started to roll over just a little bit again. And everybody was talking about it hitting new lows. And one of the things I made the point of is that energy stocks were not hitting new lows at that time. And that's a big deal to me because once you start getting that divergence between the crude itself and the stocks, which I tend to focus more on the equity side of things, you can get some really good moves, which obviously it took a little while to take place, but we're starting to really see the acceleration there. The energy names started hitting my nightly scans and weekly scans about 5-6 weeks ago on that first set of divergences. And then it really started to dominate the lists over the last 3 to 4 weeks before this price action really started getting going. And so it was a real nice tell. Again, that's with that RS or relative strength I use being so short, it kind of gets you a front of some of these moves. Sometimes the price hasn't even moved at all yet. It's just the fact that other things in the universe are slowing down while it's starting to base out and move up slightly can give you that key that, hey, maybe it's time to start paying attention here.
Okay, all right, yeah, I'm just looking at Exxon Mobil here, and boy, bounce between 84 and 86 for the better part of a month, and then once it cleared that $86 level, up and away. So we'll keep an eye on the energy sector here as well. You talk about anti-dollar trades, and the dollar was really the culprit for some of the negative earnings reports for some of the multinationals. It's come off a little bit. What are you looking for in the dollar, and discuss some of your short-term anti-dollar trades?
Well, I mean, oil's a great one. Energy's a great space for that. Other commodities are a great space for that. Steel. We saw a terrific move in that yesterday. However, you started seeing it hit some relative strength scans, and you really started getting things going in steel about 3 or 4 weeks ago. That we saw a first surge off those lows when the dollar took the first dip down. And so now that we had the dollar start moving down and make a lower high, that gives you the opportunity to think, okay, where are our peripheral trades to this? And commodities are obviously the first thing that hit the. Everybody talks about multinationals, but multinationals are up pretty good anyway. So the commodity play to me has a larger potential velocity. And I'm real big on velocity, to where if I'm going to get into something, I'd like to at least think it has a good chance for a fast move in my direction.
Okay. Besides Netflix, there's some other internet names out here that you're following, and I can't say I'm real familiar with them, so that perks my interest here. Let's talk about these two, FDN and PNKI.
P and QI, and they're both
Q.
ETFs. That's why.
Okay.
That's one of the reasons. I used ETFs in a lot of the stuff I sent y'all, just mainly for the scenario that just gives you the broad coverage, and then depending on how you want to dig down in that, you can. I'm one of the people that's not sure you have to. I see a lot of people on the streams and online. I love anybody's way they trade as long as they make money, but it seems to me they complicate things a lot. And there are sometimes the ETFs, and with certain clientele, the way I manage money tactically, it's just easier for them, and we can still get, in my opinion, a as good or better risk reward. And the one thing we don't have to worry about is everything we just talked about, is these earnings surprises. We talked about the good ones, but we hadn't talked about Sandisk yet.
Okay, let's all right. Well, let's go into Sandisk because I want to see where that thing's trading. They really whooped it up in the pre-market trading. Took it down to the lows of the move. The company basically told you this was going to come into plan, and now it's coming back a little bit off the pre-market lows. Let's talk about Sandisk.
Okay. Um, It was one I loved last year, and then after that last gap down, right in January, I was kind of burnt on it a little bit, realizing that I didn't know if it was just its business or its size and the pricing. You were seeing a lot better movement in the things that were down in the 20-30 range, the Broadcoms, the Microns, the things like that. Could have been fundamental to me, could have been just the price movement. I don't really know or care, but I was seeing better movement there. So moved over to that. Now with Sandisk, though, it's starting to reach some interesting levels. The last big warning, like you said, and then it moved down and it started moving back up in the 70 level. But now that it's gotten rejected there at the 70 level and at the falling 20 SMA or middle Bollinger Band, whichever way you look at it, I think we got a good chance head down to the probably 60, 62 range if it can't hold here. If it can hold this, fine. 63 is a good area. I heard you talk about that earlier this morning. That's fine too. But if it can't hold that, the next thing we have is around 60. And then below 60, I was looking at this morning, you're in the low 50s. You're at around 53, which is actually where your good, solid support probably is. And I know no one wants to see it go that low, and I'm not sure it will. But the way the daily RSI looks to me, which is one of my big studies on this scenario, unless it closes this gap from this morning really quick, we're probably going down to that 60 level, which is the 61.8 retracement at 60.48 or below.
Okay. All right. Let's just take some looks here at the overall market. I know you're positive here, knocking on the doors of all-time highs. What are you looking for, to give you confirmation of, a move up to newer territory, higher territory?
Well, obviously, my macro view bases mainly on my breadth work. And that's already telling you that there's a lot of underlying strength here, not only in the major side, but also underneath. Sure, there are some divergences and things like that, and those are all fine and good, but divergences don't do you any good until price decides to follow. A lot of times we have 5, 6 divergences in a row before price follows. So you really need to be careful about those. But, everything looks pretty strong under the surface right now, improving. I heard someone say this morning, a few minutes ago, about the idea that with the Russell strength and mid cap strength, you're probably going to get the large cap strength here pretty soon. And if energy continues to play along, because that really was where a lot of the drag was last year. If it plays along, I think because of the cap weightings in some of those, there are actually some other full sectors that could probably take a break here, and we still move higher from that rotation.
Okay, and then you also talked about some relative strength movers that were on your list last night, and of course that's for today's trading session. Let's just pull up a chart, a few of those, and just tell us what you're looking at, besides the relative strength indicators.
All right, give me just a second, and actually
s-
go ahead, and if you have the tickers right there, I just lost the email that I had you guys on.
o-
So, the ones I put on here, particularly on my uh, link to my relative strengths that I do different FinViz sheets for them, so we can look at all the charts and all that. And on there, that's today. I mean, a perfect example of one of the larger that's gotten just creamed is Rig. You got a 32% short float there. That's a huge scenario that if energy does keep playing CAM,
Okay.
another energy play that's in there. If you'd rather refining HFC, GE's on there, and I actually like GE right around here just to keep an eye on because of the fact that it has pulled down from that level. If it can hold 27 to around 27, 30, 40, which I haven't looked at it this morning, so it might be below that. If it can hold in those levels, I think it's something you got to keep an eye on. JB Hunt did a great job popping up yesterday. I think, again, it pulling back to around 90 could give you, if it holds, an opportunity. Trying not to give you all energy as I run through
That's okay.
these.
That's okay. I mean, if that's what's
Uh,
popping up in your
it's
scans.
it's dominating them right now. I mean, it's just ridiculous. SunTrust STI had a nice look yesterday coming out right up towards that 43, 42, 40, 42.70, 43 level. It can get over that. It looks pretty good. One I liked in the insurance was Lincoln National, LNC. It's got a really nice looking chart right now, and the volume yesterday as it popped up out of that lower sideways move up towards these highs says that if we can get some continuation, the only thing we really have to worry about is that one tail back in early March. But again, the way it's coming out with the volume the last couple of days, I think that tail might get whacked.
Okay. All right. We've been on the line with Tommy Lackey Jr. He's founding partner and CIO of the Barber Lackey Financial Group, sharing his technical analysis, insights, and fundamentals on the market as well. Thanks a lot for coming on, Tommy. We'll talk to you again soon.
No problem. Thank you guys. Y'all have a great rest of the week.